Welcome to another week in crypto. This is Steph from the SwissWolf. I'm going to give you a pretty quick update today on where we stand, what to look for this week, and why this week is very important. First of all, because we have the FOMC on Wednesday, the Fed is going to decide if they cut the rates or if they maintain it the same way. Currently, what is priced in, because it's always important to know what is priced in versus what the actual outcome of the event is. If the outcome is exactly what the market has priced in, then there is no surprise. It's as expected, and usually the market doesn't have a huge reaction to it. But if on the other side there is a different outcome, either more or less than expected, then you have a surprise. Currently, there's 25 BPS that's priced in. 87% of the investors are expecting a rate cut because the job data is pretty weak, inflation is down, and the Fed is going to have to choose if they still want to fight inflation or if they actually want to boost again the job market. This is the main event this week, and because of this, I think this is where we're seeing a pretty ranging market at the moment. It's waiting for the Fed to take a decision, to announce a decision. Are we going to have 25 BPS? Are we going to have 50 BPS? I know that some of the members were for a 50 BPS cut. And if we get something that is not priced in, like a 50 BPS cut, it's going to be bullish for the market. I don't think there's going to be a sell the news if we have a 50 BPS cut because it's not priced in yet. So it's not expected. Of course, on the other side, if we get no rate cut, not priced in, very bearish for the market because they're expecting a rate cut. And on the other side, we have the Bank of Japan that's meeting next week to decide if they're going to raise their interest rates or keep them the same. I don't know if you remember earlier this year, we had carry trade sell off that happened in the market because Japan raised its interest rates. And for a very long time, investors in Japan were able to borrow money at almost 0% interest and then invest in higher yields asset classes like bonds, stock markets at almost no cost because there was no interest rates. The raise of interest rates that happened forced investors to sell their asset classes that they held. And this created kind of a sell off in the market where we had to recover. I don't remember exactly the date it was, but because this happened, there was a pretty big capitulation in the market. And there is a pretty big worry at the moment that if we see a rate hike again, there is going to be a lot of sell and people will have to sell all of what they have to repay the loan back and make sure that they don't have to pay interest on it. The one difference this time is that it's already priced in. Investors in Japan are already expecting a rate hike and therefore are already taking action towards it because it is as expected. So if we have a rate hike, we could see some temporary bearishness, of course, because it will force some others to sell. But if we have no rate hike, which is not priced in, then we might see a rebound and they might be able to buy back what they had sold before. In terms of charts, on the weekly, we just saw a doji, nothing major. We had a sell off, a slowdown, and a doji. Now the market is waiting for the Fed to announce their decision. On the daily, I've seen quite a few people talking about that rising wedge. So, a rising wedge is when the market kind of trends in between two trend lines, one at the bottom, one at the top. And in most cases, this is a trend continuation pattern that leads to a bearish move. But the one falling wedge I think that a lot are ignoring is this one, which is on the daily and also been happening for quite some time yet. We have support here, we have support on the weekly here, and this trend line here is a very steep trend line. Usually, steep trend lines lead to strong breakouts. So yes, this could lead to some temporary bearishness around the 85K. We could revisit that support or even 84K to liquidate again the traders. And then this falling wedge would probably play out and we would see a very strong rally. Overall, the high time frame is still bullish. We did break this level here, but we didn't fully turn bearish yet. And on the monthly, we are still bullish, pulling back to exactly the 78.6 level and almost to the T on the 70.5% level on the FIB21. This is usually a very strong level. As long as we hold this, we will most likely see a rebound from the current level. It could take some time. We've seen in previous months that it can take some time to find the bottom. If December closes very strong above at least 50% of that candle, then we could see a quick rebound. But if we see a doji in December, then expect some more ranging before we actually see the price turning. On the daily, we're just, as I said, forming this rising wedge within the falling wedge. And when you have two patterns within each other, you have to look at which one is the shorter time and the longer time frame. Currently, the rising wedge is the smaller one and the falling wedge is the bigger one. So we could have short-term bearishness before long-term bullishness. On the 4 hour, it's exactly the same. We're retesting that level here as support. This was the kind of weekend price action. Monday, when Mondays are bearish, it's usually a good sign for the rest of the week. We take a look at Bitcoin dominance. It is pretty bearish, which is a good sign because usually if we were to enter into a bear market, you would unlikely see Bitcoin dominance falling because momentum is also being lost on alts. On Ethereum, very strong chart as well, similar to Bitcoin, reacting to a strong demand zone right here. The 61.8% fib retracement is usually also very strong. We had a breakout and now we're having a retest of that very strong demand zone. And Ethereum Bitcoin is actually turning bullish right now. If we look at the weekly, it's the first time we're having that strong bullishness coming back. Well, not very strong, but stronger compared to these moves here. So there is some confidence in the alt market. It's not full doom yet. I'm still very bullish in the market. And considering also that we are pretty bullish on the S&P, I expect price to follow and make a new all-time high. And also, as you know me, what I like to do when I look at a chart is also, well, are there any confluences helping me in my decision? Is it confirming what I'm seeing on the chart? Or is it actually going against what I'm seeing on the chart? So for this, let's take a quick look at some of the metrics that I use. Bitcoin exchange reserves. We are falling still. We are making new all-time lows almost every single week. And this means what? This means that whales are buying. The spot supply is actually drying up while future traders are getting liquidated. Whales are buying Bitcoin. Bitcoin realized price for accumulation addresses. We actually were under the realized price only really when we had a bear market. This was COVID crash, so it was a little bit different. But when we were below that orange line was usually a bear market. We did come to retest it quite a few times in a bull market. And currently we actually retesting here close to that realized price. Still in profits. Accumulation addresses are accumulating, like their name says it, which is very strong. And they're not accumulating just a little bit, they're exponentially accumulating. If you look at the inflows into accumulation addresses, you can see they've been very active since, you could say, September, October, and also in November at these prices. So accumulation addresses keep on buying that Bitcoin supply that is drying up. We're seeing the same thing for Ethereum. The reserve on exchanges keeps on falling to all-time lows. We haven't seen these levels, I think, ever, actually, not just this cycle, but ever. Realized price for these accumulation addresses is also still in profit. We have retested this level right there and are bouncing, so they're buying very heavily. But of course, on the other side, you have open interest that is falling because traders keep on getting liquidated. And that tells us that there is a very strong likelihood that that fall that we're seeing on Bitcoin is just futures driven, not spot driven, because we're seeing the complete opposite kind of behavior and sentiment in the spot side. Currently, the futures market is very bearish, liquidation keep happening, but the spot side is very bullish. And you can also see this in the Bitcoin net flows on exchanges. So If during a day you have more outflows than inflows, outflows is when people buy and withdraw the Bitcoin, and inflows is when people deposit in the exchange to sell it. So if the net is an outflow, that means that more people bought and withdrew their Bitcoin versus the people that put their Bitcoin on the exchange to sell. And we're clearly seeing a trend that is outflows, which confirms what we've been seeing. It's just another confluence to confirm or put the strong likelihood that we are actually very bullish on the spot side. I also look at the Bitcoin velocity. It's a pretty interesting metric that I've discovered, and it's the speed at which the coins actually go from one address to the other. If the speed is very high, that means that people are buying, selling at pretty high speeds. So there's a lot of activity. When the speed is very low, that means that people are buying, putting on their wallet, and then keeping it there. That reduces the speed. And we've seen a massive decrease since the beginning of the bull market and of the bear market here. And we haven't seen those well addresses. Actually, the majority of people holding Bitcoin are not selling, they're not moving their coins, which is very bullish. So what I'm looking at for this week is really for Bitcoin to find support confirmed by maybe the FOMC cutting 25 to 50 BPS. And what would be really bullish is if the Fed actually announces QE, which would inject way more liquidity in the market that would then most likely end up for a portion of it in Bitcoin and crypto. The market is still in max fear. We are almost at a bear sentiment, bear bottom market sentiment right now, and we're actually very high in price on support. So the metrics that I showed you kind of confirm that this is very likely going to be a strong support that is going to be very hard for bears to break. I know that crypto Twitter is very bearish right now, and even some influencers already saying that this bear market we are in right now is most likely going to be very different than the previous bear markets. But are we really in the bear market? If whales are buying, if we're seeing that strong accumulation, you just have to decide, okay, am I going to follow the general sentiment, or am I going to keep focused on the data and kind of go towards what whales are doing? Me personally, I remain very bullish. I think that, and also historically, the market has done that many times. It surprises a lot of people. This is what I'm keeping an eye on for this week. If you've liked and enjoyed this breakdown, please follow and subscribe. I'll be dropping breakdowns like this pretty often on a weekly basis. And if you want a more deep dive into what's happening, the explanation of the metrics, and what my concrete plan is, you can join the community. It's in my link. I hope you guys have a great week. If you have any questions, please drop them in the comments. I will look at them and then reply in the next video. Bye, everyone.